Welcome to the Mortgage Foundations podcast, where we are here to guide you through the ins and outs of the mortgage world. Get ready to unravel the complexities and gain a solid understanding of everything you need to know about mortgages. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with expert insights and tips. Let's dive into the fascinating world of mortgages together. In today's episode, Tyler Cowell, the principal broker of Mortgage Foundations, FSRA number 13614, will cover the importance of appraisals for mortgages in determining the value of a property used as collateral.
An appraisal plays a crucial role when it comes to securing a mortgage. It provides lenders with an assessment of the value of a property, which helps them determine how much they are willing to lend to a borrower. In simple terms, an appraisal is a professional opinion on the market value of a home. So let's dive into why an appraisal is so important in the mortgage process. First and foremost, an appraisal acts as a safeguard for both the lender and the borrower. It ensures that the property being used as collateral for the mortgage is valued correctly. By getting an unbiased appraisal from a licensed professional, lenders can confidently evaluate the risk associated with the mortgage. The number one risk for a lender is that the client may default on the mortgage, and if this happens, the lender may have to step in and sell the property. An accurate valuation will help ensure that the lender can be expected to recoup their investment if this happens. For borrowers, an appraisal can be a double-edged sword. On one hand, it provides an objective assessment of the property's worth and may provide peace of mind to the client on the value of their property or future property. On the other hand, if the appraisal comes in lower than the expected value, it can pose challenges such as requiring a larger down payment or limiting the amount of equity available for a refinance or second mortgage. Regardless, having an accurate appraisal helps borrowers make informed decisions about their investment. It should be noted that an appraisal can only affect a purchase price if an appraisal was a purchase condition. It is completed prior to the sale being agreed upon, or if the seller is open to negotiating. Once completed, the purchase and sale agreement is binding in the absence of these, even if the appraised value is far lower than expected. Appraisals are also vital because they help prevent fraudulent activities in the real estate market. They provide an independent evaluation of a property's value, reducing the risk of fraudulent transactions. Appraisers use various methods to assess a property's worth, such as comparing it to similar properties in the area or considering its unique characteristics. This helps detect any discrepancies or attempts to inflate the value of the property. Additionally, an accurate appraisal is essential to determine the loan-to-value ratio, or LTV. LTV is a significant factor in mortgage lending decisions, as it measures the risk associated with the mortgage. Lenders use the appraised value of a property to calculate the LTV, which is the percentage of the mortgage amount relative to the property's value. The higher the LTV, the riskier the mortgage is perceived by the lender, unless the mortgage is insured. Therefore, a reliable appraisal is crucial in determining the terms and conditions of the mortgage. In some cases, an appraisal may also unveil potential issues with the property that may affect its value or pose risks in the future. For example, an appraiser may identify issues such as structural problems, safety hazards, or zoning violations. These findings may protect the buyer from purchasing a property with hidden problems, while also alerting the lender to any potential risks associated with the mortgage. In some instances, a lender may opt to use an automated valuation model, or AVM, to appraise the property, which is basically a computer-generated appraisal of the property. While these are being used more in certain types of mortgage transactions, an in-person professional appraisal is still the most common practice for most lenders, since the AVMs do have their limitations. It is important to note that even though in many cases the appraisal is requested by the lender and paid for by the borrower, the appraisal report cannot be released to the borrower. The findings of the report, including value, can be communicated. However, the report itself belongs to the lender and can only be shared with the borrower upon the lender and appraiser's approval to do so. Ultimately, an appraisal is a crucial step in the mortgage process that benefits all parties involved. It provides an unbiased assessment of a property's value, protects borrowers from overpaying, and helps lenders make informed decisions about the risks associated with the mortgage. It also serves as a safeguard against fraudulent activities, ensures compliance with lending regulations, and determines the loan-to-value ratio. So, next time you're going through the mortgage process, remember the importance of an appraisal. It's an essential piece of the puzzle.
In today's episode, we discuss the importance of appraisals for mortgages in determining the value of a property used as collateral. We hope you found today's episode informative, and don't forget to hit that subscribe button to stay updated for our next episode. Thank you for tuning in to Mortgage Foundations, and remember, every home starts with a foundation. Your mortgage should too.